Well, good morning, traders. And last week we talked about the idea that risk assets more broadly were missing a bit of a catalyst. We're going to see some choppy trade. Well, if we have a look at the backdrop by which we're working in now, I think things have just become just that little bit more bullish. We'll go through the backdrop now. But, if you have a look at the NASDAQ, the market up over 1% overnight, it's going to be one of those sort of charts that we're going to look back and say, think less, to close your eyes, just hold the position, let it run, just let it breathe and just go with the flow. And, that's where we're seeing that market. It just looks so beautiful on the daily chart there, just trending like a dream. Have a look at the Russell up over 1% as well. So small caps working quite well. We're seeing a little bit of underperformance from the S&P, that market up over 0.6 of 1%. So held back a little bit by financials and healthcare, but, tech, utilities, discretionary, all working pretty well there. We've got volatility coming down a touch, down about 3 vols on the session with the VIX 31%, but implying sort of 2% moves up or down. One suspects that there's probably downside in the VIX on the short term because we're not seeing those kind of moves portrayed. The bond market's the key here. You're seeing nominal bond yields up 1 basis point across the curve. It's not really buying into anything we're seeing at the moment. And as long as nominal bond yields stay anchored, then I think risk can stay going forward. Because what you're seeing, if you look at inflation expectations, 5-10-year break-evens up 5 basis points. You can see forward break-evens up 4 basis points. Inflation swaps moving higher. We're seeing inflation expectations moving higher, but nominal bond yields fairly well anchored. So therefore, what you're seeing is real yields moving ever into deeper negative territory. Of course, that's really good for gold, but it's also good for the future cash flows of these businesses, or what we perceive to be the future cash flows, and how attractive the net present value of these equities are. The other issue is that commodity markets are working beautifully at the moment. WTI closing the March gap. We've got potential breakthrough there going up to the 200-day moving average. Copper, lumber, all look absolutely beautiful at the moment. Commodity prices are telling a story. The bond market not necessarily buying into that. We've also got weakness playing through in the dollar on the back of that. And again, that's just feeding through into risk asset appreciation. So some interesting dynamics playing through. But as long as the nominal bond yields are not going to move materially higher from here and inflation expectations are moving up, then risk is going to appreciate, in my opinion.